Rise and grind, trading family. Welcome to Trading Floor for Wednesday, June 3rd. The market just closed 9 straight green days at record highs, and the administration dropped a 60-country tariff wall overnight. Futures are flat. Something has to break. Standard disclaimer before we dive in: nothing we say on this show is financial advice. Every trade you take is your own decision. Do your own research, manage your own risk, and don't trade what you can't afford to lose. Appreciate you, TB.
All right, let's talk about what just happened. The administration formally proposed a Section 301 tariff framework targeting 60 economies overnight. 10% baseline on the European Union, Japan, China. The whole list. 12.5% on everybody else. And the tape. Zilch. Futures are barely breathing.
That's the tension that's got me twisted. You got the most aggressive trade policy action in decades, and the market is yawning. Is this the most confident market in history? Or is it the most dangerous head fake?
I'm leaning toward head fake, and here's why. The ISM Services print drops at 10 a.m., and the survey was collected during the last 2 weeks of May. What happened in those 2 weeks? The Iran deal collapsed. Oil ran from 88 to 96. Rubio went from saying deal tomorrow to talks continue. And the OECD just cut global growth forecasts to 2.8% base case, 2.1% worst case with a Hormuz closure.
Exactly. That report lands on purchasing managers' desks before they fill out the survey. I'm calling ISM at 49.8. Contractionary. Barely, but below 50. And if I'm right, that 756 support on the SPY gets tested before lunch.
The SPY closed at 762 yesterday. If we break 756, you're looking at a 2 to 3% pullback minimum. But here's the thing. A weak services number is bad for equities, but it's also bad for rates. Stagflation setup. Bonds don't know whether to rally on the growth scare or sell off on sticky inflation.
The only clean play is oil. Supply is supply regardless of demand. And that brings me to the story I want to spend real time on. The physical oil market is screaming while the financial market is whispering.
Walk me through that gap.
Sarah Vakshuri from SVB Energy put it bluntly this morning. The Iran conflict is creating a structural supply deficit, not a temporary risk premium. Physical crude is changing hands at $150 per barrel. Meanwhile, Brent futures sit at 97. That's a $53 gap. The biggest dislocation I've seen in this market.
The physical market trades real money. The financial market trades scared money. That convergence is going to be violent.
When it converges fast. And you're already seeing early demand destruction signals. India's crude imports just fell to pandemic-era lows. That's not a headline. That's a real-time demand response. The OECD growth cut reinforces it. We're heading into a global slowdown, and the supply disruption from Hormuz is still the bigger factor.
My wave trader AVGO is watching the solar names on this dynamic. Canadian Solar, Solar Edge, Enfall Green Pre-Market. High oil prices accelerate solar adoption. That's a second derivative trade on the same energy thesis.
Good call. My TFT AVGO is sitting in cash right now. I've got a limit order on Exxon at $147.50. Stop at $142, $3,000 size. I'm waiting for the ISM-driven pullback to get filled. If oil dips on a peace deal headline or a bad ISM print, that's my entry.
Let's shift to your segment, the artificial intelligence Euphoria test. Marvel earnings are behind us, Broadcom reports tonight. The sector is at a pivot point.
Yeah, this is the part that's keeping me awake. I've been riding Marvel since 198. I'm now at 327, up about 25% total across my tiers. I took partial profits at 3 levels. 25 shares at 210, another 25 at 260, and the last 8 at 300. I've got 31 shares left with the stop at 270.
And the leveraged Marvel ETFs are up 65%. That's retail flow at terminal velocity. When the 2 times and 3 times levered products are doubling off an already doubled stock, you know the euphoria is real.
Michael Burry is tweeting .com parallels on the SOX index. Jensen Huang at GTC called Marvel the next trillion-dollar company. That's the kind of language that creates its own gravity. Tonight, Broadcom reports, estimate is $2.02 per share. CrowdStrike also reports,
If Broadcom guides up and mentions artificial intelligence demand continuing to accelerate, the Euphoria gets another leg. If they flag tariff headwinds or softening enterprise spending, the whole sector becomes vulnerable. And we already have mega cap divergence. Google down 3.7% pre-market, Amazon down 1.8%. That's not a healthy tape.
I'm not being bearish on the sector. I'm saying the setup for disappointment is there, and when euphoria meets a miss, the unwind is violent.
Let's rotate to the Fed because it's quick but important. Solomon at Goldman said rate cuts are materially down. Warsh is putting conservative hawks in as interim advisors. Hammock at Cleveland says the Fed needs to act on inflation, all in the last 24 hours.
Rate cuts are dead for 2026. The market has been pricing a 2026 cut since January, and it's just not happening. That caps multiple expansion. It supports a value rotation out of growth. Point it out, move on.
So we go into the ISM print with this backdrop. Tariffs, oil dislocation, artificial intelligence euphoria at a test point, and the Fed slamming the door on cuts. The next 2 hours determine the week.
Under 50 on ISM and the sell button works. Over 52 and the tape says tariffs don't matter. I'm at 49.8.
Let's close with what we're watching tomorrow and Friday. Give me 3 things.
Number 1. ISM Services at 10 a.m. That's the catalyst. Number 2. Broadcom earnings tonight. That sets direction for the artificial intelligence trade. Number 3. Lulu earnings tomorrow. Consumer discretionary is under pressure, and Lulu is a bellwether for that space.
And number 4, Friday unemployment data. We get the jobs report, and after the 8-day recession warning, a weak number would validate the slowdown thesis. If claims come in above 215,000, the macro narrative gets real.
My Exxon order is still pending at 147.50. I'm waiting for the ISM-driven pullback or a peace deal headline to fill it. If oil dips into the 93 handle during the show, I might jump in. Right now, I'm holding cash.
Not a bad place to be. Cash is a position.
All right, trading family. That's the show. ISM in minutes. Broadcom tonight. The oil gap watching all of us. Manage your risk, protect your capital, and I'll see you tomorrow. This is Wildcard signing off.